Would you buy shares of a company that had previously declared bankruptcy on more than one occasion? If you said no, you would have excluded one of the most profitable and well-diversified companies that's approaching 50 years of consecutive dividend increases, PepsiCo, ticker symbol PEP. We're going to take a look at Pepsi and why it's a great dividend stock for long-term investors looking to reach financial freedom through their investments. I'm Jonathan, and we're talking Pepsi stock and dividends in today's edition of Constant Cash Flow. Before we get started, I want to give a quick shout out to two recent subscribers, Pete Tenuta and I'm Not Hooper. Thanks for watching and subscribing, guys. I really appreciate it. Now, let's talk about those bankruptcies. PepsiCo was started from humble beginnings in 1893 by Caleb Bradham in New Bern, North Carolina, jumping on the soda fountain craze sweeping the country. By 1898, he had invented his own drink, which he named Pepsi Cola. After World War I, the price of sugar quadrupled from a nickel a pound to over 20 cents. Bradham had bought heavily in anticipation of even higher prices, but when sugar then dropped to 2 or 3 cents a pound, the business failed, filing for bankruptcy in 1923. By this time, Coca-Cola had already emerged as the dominant brand, being sold around the United States and in numerous foreign countries. Honestly, the future could not have looked worse for Pepsi.
It's the end of the world!
When Pepsi declared bankruptcy in the spring of 1923, a group of creditors took control of the company's trademark, patents, and other assets for just $30,000. That summer, Roy McGargle created a new Pepsi-Cola company and bought out the creditors for $35,000. With full control of Pepsi, McGargle worked to keep the company alive, personally loaning it money and moving the offices and plant to Richmond, Virginia. Despite his efforts, McGargle was unable to keep the company solvent when the Great Depression hit. In June of 1931, McGargle's renamed National Pepsi-Cola Corporation was declared bankrupt. Again. In the summer of 1931, McGargle joined forces with Charles Guth, owner of Loft Incorporated and Mavis Candies, to start the ball rolling with Pepsi, pushing it out in drugstores and as a bottled drink. Guth was upset with Coca-Cola for not giving him wholesale prices for the syrup used in his soda fountains and was looking for an alternative. And the rest, as they say, is history. Pepsi's an iconic brand and has many different products under its large umbrella. Of course, we immediately think of their soda drink line primarily, and rightly so. But did you know that PepsiCo also owns many other popular brands, including Frito-Lay, Quaker, Lipton, Rockstar Energy, Muscle Milk, and Gatorade? In fact, Pepsi has more than 23 brands that generate over $1 billion each per year. 3 of its drinks are in the top 10 of the most beloved soda drinks in the U.S. market, and Frito-Lay holds over 40% of the worldwide market share and 56% in the United States for snacks. When looking for diversification, it's hard not to love PepsiCo. I mean, just look at the list. Pepsi, Gatorade, Naked Juice, Tropicana, Lay's, Cheetos, Doritos, Tostitos, Cap'n Crunch, Life Cereal, Rice-A-Roni, Quaker Oats. And that's just a few in the U.S. There are a ton of other regional leaders in other countries, such as Sabritas, Rancheritos, Gamesa, Marbo, and Simba. PepsiCo is diversified both by product and regionally, and I love diversification. So now that we have a good picture of what PepsiCo is as a company, let's understand how it's performed for its investors and how it may perform in the future. Now let me start by making it clear that I do not believe Pepsi is a growth play. But this is a solid stock for dividend investors, and an especially good one considering the current inflation concerns. Over the next year, inflation will at some point begin to affect purchases, but companies like Pepsi should not see the same level of impact as other industries. Pepsi's seen consistent revenue growth each quarter this year, with especially high increases in the markets in Latin America, Africa, South Asia, and the Middle East. So far, the company has shown growth in almost every single division, and there's more to come. The business has been investing heavily in mergers and acquisitions as a way to boost growth. In March of 2020, PepsiCo acquired Rockstar Energy for $3.86 billion and several other firms before that. It would not be a surprise if we see PepsiCo creating an even more competitive range of products for every item of its arch-rival Coca-Cola's portfolio, alongside its further push in the snack sector. And recently, PepsiCo made an application for trademarks surrounding alcoholic beverages under Rockstar Energy. This move can probably give us a hint about what to expect soon and has been very successful for other companies over the last few years. Now that we know about the company and how it got to where it is today as a business, let's dig into the details of the stock. The fourth quarter results for Pepsi will be available on the 10th of February 2022. Despite the company not making a prediction, the market forecasts another solid quarter. Estimates suggest 7.8% growth and 12.8% EPS growth compared to the same quarter last year. After the impressive quarter 3 results, the company currently expects to deliver 8% organic revenue growth and 11% EPS growth for 2021. If the company meets its target, it will end the year with an EPS of $6.24 compared to just $5.52 a year ago. The analyst consensus collected by Seeking Alpha suggests a positive surprise by around 4 cents, making the EPS up to 13%. However, a growth of that rate will not last for long. Wall Street analysts estimate that by 2024, the firm will have a CAGR of 4% in revenue and 7% in EPS. Pepsi's currently trading at $169.43 as of the making of this video and has a dividend yield of 2.54%. It has 49 consecutive years of dividend growth and a 5-year dividend growth rate of 7.5%. Its most recent dividend was declared on November 18th at an amount of $1.08. Now, Seeking Alpha gives PepsiCo an A-plus grade for dividend consistency, and we can see that over the last 5 years, they've increased their dividend from 70 cents per quarter to today's value of $1.08 per quarter, with estimates from analysts that we'll see it increase in 2022 to around $1.12 per quarter, or a little over 5%. In any dividend stock you purchase, dividend growth is a key factor to consider. PepsiCo is up 13.9% year-to-date, but trails the S&P by as much as 12%. However, in its industry, the company's the best performer among its major peers, 3% better than the second stock on the list, Keurig Dr. Pepper, and 9% better than its rival Coca-Cola. And for long-term dividend investors, it's key to invest in leaders in the industry with a proven track record of performance. Pepsi currently trades at a 27 forward PE ratio, slightly higher than the historic average of 24.5 times net earnings, and is in line with Coca-Cola and Keurig Dr. Pepper, suggesting that the stock is well priced. Given that analysts project the earnings to grow 7% on average in the next few years, I believe this could translate to a 7 to 10% annual stock gain, depending on business growth, margins, and market sentiment. And the dividend yield of 2.54% makes the stock a bit more attractive. Pepsi has all the factors of an outstanding stock. It's well priced, with a good outlook and strong returns. With a projected revenue growth rate of 4% and EPS growth rate of 7% a year, it's undoubtedly not a growth stock. But for me, it is one of the stocks you should probably build your portfolio around, just like Johnson & Johnson, MasterCard, Walmart, and yes, Coca-Cola. These are stocks with relatively predictable earnings, low volatility, and a clear growth path that lets you be more aggressive with your other picks. I think the company's a buy for long-term investors. Now, that wraps up our look at PepsiCo as a dividend stock investment. Thank you so much for sticking around to watch the entire video. I hope it provided some valuable information for you and helped you on your quest for financial freedom. As always, please do your own research before making any investments to see if it's a good fit for you, your goals, and your personal risk tolerance. Let me know in the comments what you thought about today's topic and what you'd like to see discussed in future videos. On the right, you can find more great videos to help you on your journey to constant cash flow. See you next time.